Have you ever pondered about the power of credit that sits in your wallet? It's a small piece of plastic, yet it holds a world of possibilities. But what exactly is credit, and why is it such an integral part of our financial ecosystem? Let's break it down. Credit, in its simplest form, is an agreement. You receive goods or services now and promise to pay for them later. This concept is not new. It's been around for centuries, from the days of bartering goods to the modern era of swiping cards. The primary difference now is that these transactions are more complex and involve financial institutions. At the heart of this system is trust. The lender, often a bank or credit card company, trusts that you will repay the amount you borrowed. In return, they charge interest, which is essentially their profit for lending you the money. This trust is quantified in the form of a credit score, a numerical representation of your creditworthiness. Now, credit can be a powerful tool for financial growth. It can help us make big purchases like a house or a car that we wouldn't be able to afford outright. It can also help us manage our cash flow, spreading the cost of purchases over a period of time. Businesses, too, leverage credit to expand operations and invest in new opportunities. But as with any power, credit comes with responsibility. Misuse or mismanagement of credit can lead to debt, and too much debt can be financially crippling. It's a slippery slope from missing a few payments to being overwhelmed by interest and penalties. And remember, a poor credit history can affect your ability to borrow in the future. So is credit a friend or a foe? That's a question with no definitive answer. Credit, like fire, can warm your house or burn it down. It all depends on how you use it. It can be your ally, helping you reach your financial goals, or it can be your adversary, leading you into a trap of debt. The power of credit lies in your hands. Use it wisely and it can be the best financial tool you have. Use it recklessly and it can be your worst nightmare. Imagine being able to make big purchases without having to save up for months. That's the magic of credit. With credit, the world of financial possibilities opens up. It's like having a financial genie at your fingertips. One of the most obvious advantages of credit is convenience. No need to carry wads of cash around or wait until payday to buy what you need. With a swipe or a tap, you can make purchases anytime, anywhere. But there's more to credit than just convenience. It's also a powerful tool for making large purchases. Want that slick new car or dream house but don't quite have the funds yet? With credit, you can spread the cost over a period of time, making the dream within reach. Now let's talk about something that might not be as glamorous but is arguably more important: building a credit history. When you use credit, you're leaving a financial footprint. This footprint, your credit history, is used by lenders to gauge your financial reliability. A good credit history can make it easier to get loans or mortgages in the future. It's like an ongoing financial report card, and you definitely want to score well on this one. Speaking of scoring, did you know that credit cards often come with rewards and cashbacks? Yes, you heard that right. Some cards offer points for every dollar you spend, which you can then redeem for gifts, travel, or even cash. Others give you cash back on your purchases. It's like getting a little thank you note from your credit card company every time you use your card. So, credit isn't just about buying things now and paying later. It's a tool for convenience, a gateway to large purchases, a way to build a solid credit history, and a source of rewards and cashbacks. The key, however, is to use it responsibly. Overspending or failing to make payments on time can lead to debt and damage your credit history. So credit can be quite the financial ally if used responsibly. But what happens when the allure of credit leads you down a path of financial instability? Let's take a moment to explore this. Credit, while a powerful financial tool, has a dark side that can be quite daunting. The first pitfall that can ensnare the unwary is the risk of debt. If you use credit without a plan or without the means to repay, you can quickly find yourself in a debt trap. It's like walking on thin ice. One misstep and you're in over your head. Then there's the issue of high interest rates. Credit isn't free money. It's borrowed money, and borrowed money comes with a cost. That cost is interest. And let's be clear, interest rates can be high, especially on credit cards. If you only make minimum payments, your balance can grow and you can end up paying back far more than you originally borrowed. It's a bit like feeding a hungry beast. The more you feed it, the bigger it gets. Another potential pitfall is the damage to your credit score. Your credit score is like your financial reputation. It tells lenders how trustworthy you are. If you miss payments, default on your loans, or utilize a high percentage of your available credit, your credit score can tumble. And a low credit score can make it more difficult to get loans, secure housing, or even find a job in the future. It's like a stain on your white shirt that just won't come out. However, it's important to remember that these pitfalls can be avoided with responsible use and a thorough understanding of the terms and conditions of your credit agreements. It's not about avoiding credit altogether, but rather about using it wisely. As with any financial tool, credit has its risks. It's like a double-edged sword. With one edge, it can help you build wealth and achieve your financial goals. But with the other, it can lead to financial instability and stress. The key is to use it carefully and wisely, understanding its potential dangers as well as its benefits. So, how does one strike the right balance when using credit? That's the million-dollar question, isn't it? It's like walking a tightrope, and in the world of personal finance, balance is indeed everything. Finding that sweet spot begins with understanding your credit limit. This is not an invitation to spend freely, but rather a boundary not to cross. It's like a fence around a beautiful garden, keeping the weeds of debt from creeping in. Always remember, your credit limit is there to guide you, not lure you into overspending. Next, let's discuss the concept of paying off your balance in full each month. This is your ticket to a debt-free life. Paying off your balance in full each month means you're borrowing money without paying any interest. It's like having a short-term, interest-free loan every month. It's one of the best financial habits you can develop, and it'll go a long way in keeping your credit score healthy and vibrant. Speaking of credit scores, they're like report cards for adults. Regularly checking your credit score is a must. It's like a regular health checkup, but for your financial well-being. It can help you spot any errors or signs of identity theft early on. Plus, it keeps you aware of your financial standing and encourages you to make smarter financial decisions. Now let's talk budgeting. It's not the most glamorous topic, but it's one of the most important. Having a budget and sticking to it is like having a roadmap in a strange city. It guides you, helps you avoid wrong turns, and leads you to your financial goals. It's your blueprint for financial success. To sum it up, using credit responsibly is like a well-choreographed dance. It involves understanding your credit limit, paying off your balance each month, regularly checking your credit score, and sticking to a budget. Master these steps, and you'll find the balance you're looking for. In the world of credit, balance is key. It's not just about spending or saving, but finding that harmonious middle ground. So are you ready to start your balancing act? Credit, a small word with a big impact. We've journeyed through the landscape of credit together, dissecting its pros and cons, understanding its nature, and exploring how to strike the right balance. Let's take a moment to reflect on what we've learned. Credit is a double-edged sword. On the one side, it's a powerful tool to help you achieve your financial goals. It can be the key that unlocks opportunities otherwise out of reach, like buying a home, starting a business, or even getting an education. It allows for financial flexibility, giving you the freedom to make purchases now and pay for them later. It can also be a safety net in times of emergency, providing a cushion when unexpected expenses arise. But remember, with great power comes great responsibility. The other side of credit is its potential to lead you into a financial quagmire. Overspending, high interest rates, and the potential for debt can turn credit from a useful tool into a heavy burden. It can be like a quicksand. The more you struggle, the deeper you sink. The key to wielding the power of credit is to use it responsibly. This means understanding your financial situation, making wise decisions about borrowing, and staying disciplined about repayments. It's about being proactive, not reactive. It's about planning for the future, not just living for the present. Remember, the goal isn't to avoid credit altogether, but to use it wisely. It's not about fearing the power of credit, but respecting it. So, let's recap. Credit can be your ticket to financial freedom, or it can be your financial downfall. It all depends on how you use it. So to answer the question we started with, credit can be both a friend and a foe. It all depends on how you wield it.